Hello everybody, welcome back to the channel, best place for long-term stock investors. Today we are going to talk about Ancom. It's a pretty cool company and he had recently really good results, right? It's quarterlies.
And actually they changed their name to AncomNY.
AncomNY because of the recent Nylex acquisition.
Yeah.
Now, what we're going to talk about, we're just going to break down what happened during the quarterlies. And as a disclaimer, none of what we say should be financial advice. And we also want to declare that we do own shares in Ancom. Alright guys, if you didn't know, we actually have a free guidebook, 7 steps on how you can get your 6-figure net worth through the power of stock investing. If you're interested in that, link is in the comments or the description. Alright, let's start with AncomNY or AncomNY or AncomNY.
Yeah.
I think it's AncomNY, right?
Yeah,
because it's Nylex, right, recently. So, so this is the price action. It's actually down 20% year to date. But it doesn't look like it, right? It looks like it's flat.
Yeah, exactly. And on surface, it actually looks pretty disappointing. But if you look at the bigger picture, right, for example, if you stretch the timeline even wider, you notice that they actually went up more than 10x in 6 years.
Nice, okay.
Yeah, and actually the reason also is because they have been divesting their business and focusing more on their core business, which is actually more profitable.
I see.
Yeah.
And we'll talk about the businesses later on.
Yeah,
right?
exactly. Okay. So if we just look at a snapshot on their quarterly results performance, you can see that for 8 quarters, they have been on a green.
Yeah, I mean, it's triple digit as well. It's crazy.
Yeah. So this actually tells us that that the business is doing really well. And if you are interested to know what is their business model, they are the sole producer of active ingredient for herbicides. It is part of the pesticides family. Basically, it just kills all those unwanted weeds all those unwanted stuff in your crop. So that is the business that they are doing, and it is a necessity product which everyone needs. The reason is because if you don't know, there's actually a quick stats. If you just Google it, I think year on year on how much food loss is actually been lost, right?
Yeah,
it's actually around like I think 40 to 50% of the
crazy.
food that you produce is like lost.
Yeah.
So you need these.
And it's lost to like pests.
Pests, pests and all those stuff. Yeah, actually there's a lot of reasons. Not only pests.
Yep.
There's also other stuff. Pests is one of the major things.
Yep.
So and hence you need all these pesticides to actually control all this and make sure that your food is non-perishable so fast. Right. I'll put it that way. So they are a necessity product, and I'll just put it that way. If you guys are interested, you can just Google their website and just find out more.
Right.
But anyway, so coming back to their financials, right? Okay, so this is their latest quarterly reports for the Q4 financial year 2022.
So the first thing I noticed is that sales, operating profits and all that, they're up good.
Yep.
But somehow the net profit is up a lot. So maybe you want to share with us why that is the case.
Okay, so I wouldn't disclose the reason right now because there's actually a hint in their I believe in the cash flow statement.
Yep.
So later I'll just tell you what's the reason why their net profit actually more than double. Right. So if you look at their balance sheet, you can see that one thing that is quite, maybe to most audience is quite concerning is because they have been exercising a lot of loans. They have been getting borrowing a lot of money from the bank. And actually there's a reason for it. It's because they have been expanding their agri-chemical business segment.
Right.
Yeah, they actually want to grow it like I believe more than 2x the capacity.
Right.
And they have also a few products that is coming in line.
Okay.
So which is why they have been borrowing money . And if you look at their equity segment of the balance sheet, right? So you notice 2 things. One is the reserve and one is the treasury shares.
Yep.
So the reserves, one part is they have been reducing in amount from like 100 million to like 50 million. So I'm not sure.
60% reduction around there almost. Yeah.
So actually I'm not too sure why they did reduce. Could be is because they have been buying back shares. I'm not sure whether did they use that to buy back shares or they use it to like expand some of their properties. So that one wasn't disclosed, but that is something that you may want to take note of. And another thing is the treasury shares. So if you notice that treasury shares actually increased from 6 million to 30 million. So the reason is because they have been actively buying back shares for the past I'll say 2 to 3 months.
Okay.
Yeah, just constantly buying back shares. I don't know what's the reason why.
It's the dip, right? Like if you go back, there's a dip.
Yeah, exactly. Yeah, so there's a dip. So maybe the company is buying the dip.
Yeah.
And the dip goes deeper. So they buy more.
Dip. Yep.
Yeah. Okay, so here comes the reason why their net profit actually more than double. And you can see it in their cash flow statement. So if you notice that there's this one line in between, it's called the proceed of disposal of property, plant and equipment. So that amount actually grew from 1.9 million to 25 million. So yeah, that is actually why their profit actually like double up, is because they dispose one of their subsidiary in their business.
Okay.
So yep, I think let's go to their segmental breakdown.
Yep. Hey guys, if you're enjoying the video so far, give us a like, and as usual, comment. Let us know whether we're doing the right thing or not the right thing. If you feel like you want more of this type of content, let us know. If you want less, just let us know as well. And of course, subscribe, click on the notification bell so that whenever new videos pop, you know it right away. Okay, Jonathan, I want to find out a little bit more about the segment breakdown, because there's one thing that is very interesting about this business is that primarily they are known for agriculture, but a lot of people actually don't know that they are big in industrials as well. So maybe you want to share with us a little bit about this segment.
Yeah, so Ancom actually has like, I'll say 5 business segments.
Right.
So the most obvious one you can see is that 2 of them actually stand out the most. So the first one is actually the industrial chemical.
Okay.
So not only Ancom manufactures active ingredient to make the herbicides, right? They also did like a distribution business for Petronas. So what do they distribute is that they actually help them to distribute methanol. This thing called methanol is an alcohol, non-edible from what I understand from it, from Googling. But not only they actually distribute, they also make ethanol.
Okay.
Yeah, just take out the
alcohol.
M there. It's also another alcohol. But this one is, I believe it is edible. Yeah, I believe it is edible.
Drinkable.
Yeah. Or drinkable.
Okay, go on.
So yeah, but the ethanol segment, I think it was very small only. I mean, in terms of their revenue contribution. So if you just look at the slides, right, on the graph here, you notice that industrial chemical is the largest revenue contributor for the business.
Okay.
So that's the main thing. And then the second thing you want to know is that their agri-chemical business is growing. And it's a good thing is because one is because it is a necessity product, and 2 also is because they managed to capture a lot of market share in the country. I'll show you why and which country they're actually capturing right now. And then the third point is that thankfully, their non-core business, the polymer, investing holding, and others, basically what others stands for is they have like education business, media business.
Also,
Yeah, so thankfully that those revenue is actually dropping right now. So they are
really.
So if you look at the trend over here, the blue,
no, as in like why is it thankfully in your point of view?
Because I want, as an industrial chemical and agri-chemical business, I want them to focus more on the profitable ones. So the most profitable one is actually the agriculture business.
We'll talk about it later on, but I think I want to highlight something that I noticed here as well, which is that the industrial chemicals are not as consistent as the agri-chemicals, right?
Yes, exactly. The reason why is because one thing is it depends highly on the crude oil prices movement.
Right.
And also the demand for when they extract out, whether they need the service or not. So that part is really inconsistent and it's hard to predict.
Right.
But for the agri-chem, it's easier to predict because it's always growing. You need, as more food is being produced, you need agri-chemical.
And of course, I think with whatever that's happening around the world today, like food security is such a big thing, right?
Yes, exactly.
So Ancom is, I guess, indirectly linked to food security or countries desiring food security.
Yes.
Right.
Okay, so this is the revenue segment breakdown.
Yep.
Now let's have a look at their operating segment breakdown.
It's a clear
winner. If you can see, right, the only 2 segments that is bringing profit to the company is just their agri-chem and the industrial. And largely, it actually comes from their agri-chem business.
Right.
So I was actually really happy when they actually expanded this agri-chemical business. They managed to capitalize on this opportunity. And but unfortunately, they still have losses in their investment holding and other business segment, which I really want them to actually get rid them of. But then I'm not sure, maybe they have like their purpose. But so if you look at the overall operating profit and loss for each segment, right? So polymer is one thing that you notice that they actually have been dropping a lot. And agrichem and industrial has been exploded lah, basically the growth. But I don't think industrial chemicals growth will be sustainable lah.
Okay, so is it because of oil or is it for other reason?
Yeah, it's because they are really directly linked to the oil. Means if oil topples, they also topple.
Right, which is rough. So I mean, this green bar right here, 2022 is essentially what you're saying, like, where oil price went up a lot. So
exactly. That's when I believe crude oil prices went up to 100 plus, I believe. Was it 100 plus?
Yes, now it's about, I
90
haven't checked, I think it's about 100, 90, 100, somewhere there. Yeah.
Yep. So if you read further about their quarterlies, basically their comments, so basically nothing much is the reason why their agrochemical has been improving is because they have generated a higher sales volume, and they have actually a very strong demand in the Asia region. So I mean, it kind of paints it out that the food security is pretty important in the Asian region. And the reason why they are industrial chemical, as just now I mentioned, because of one is selling price and one is the sales volume. So selling price is directly related to the crude oil movement. And the management also disclosed that the reason why they managed to get so much profit is because they have a one-off gain on disposal of this asset, which is worth 24.5 million.
And if you remember in the earlier slide, we show that the sales and operating profit grew like 30-35%, but net profit grew 138%. This is the big reason why.
Yes, because
so it's just a once-off lah.
Yes, it is a once-off. So that's something that you need to be aware of, right? So the reason why I put this news over here is because this is actually what contributed the agriculture's chemicals revenue. So if you don't know already, actually Thailand and Brazil did a ban on this pesticide called herbicides called paraquat.
Okay.
So what do they classify them is actually a class 1 toxicity pest control kind of product. Class 1 meaning it is very hazardous, it's very harmful. So it's really bad for the soil. So thankfully Ancom has a product that is close substitute to this paraquat, and it's less harmful. Okay. So they managed to capture the market share in Thailand and Brazil.
It's more, it's less ESG friendly in a way.
In a way lah.
Okay.
And that's the reason why their revenue has actually been increasing, and also their profit. So the final takeaway over here of this quarterly report is that number one, the 180% jump in profit is because of the disposal. So if you exclude this one-off disposal, their profit actually only increased about 84%.
Which is still big.
Yeah, which is still big. And largely, it's actually not coming from the industrial chemical. It's largely coming from the agri-chemical business. So that's one thing you need to take note of, is that even though they make a lot of money in their industrial segment, if you notice, the revenue is so big, but their profit is so small. Yeah, so actually, if you don't know already, their operating margin for that industrial segment is around like 4 or 5% only. And their agrichem is about 15%.
Yep.
Yeah. So that's the first point that you want to know. And the second point is that you need to take note of is the increasing in loan borrowings for their industrial and agri-chemical business. The reason why is because they have been doing a lot of expansion in their core business, which I think it is fine as long as they manage to pay off. And the last point is that they have, not only the company has been aggressively buying back their shares, the directors as well. So both of the MDs, the managing director, has been buying back shares left and right when the prices are like dropping. I don't know what this indicates. Maybe they think that the company is undervalued, but I'm still pretty excited for this company because it is a very rare company that you would find in Bursa lah. I would say lah. It's really one of a kind. And I think we kind of like exposed, that we say we kind of own the Ancom shares.
So we'll leave it there.
We'll leave it there.
And guys, if you, as always, if you enjoyed the video, share it with your friends. Come follow us on our other socials. And just to repeat, let us know, if you like this sort of content in the comment section below. And we'll see you in the next video.